out more about the credit downgrade for the United States of America from AAA, which is the highest, to AA plus from Standards & Poor's. And with me is Eiad Asbahi with Prescience Investment Group here in Baton Rouge. And the first question that a lot of people are going to have is, okay, we were told during the debt wrangling with Congress that if it dropped, that means interest rates were going to go up. So what do you see?
Well, you have to understand that loans across the spectrum are priced off of the rates that the U.S. that the government can borrow upon. And so if those rates do indeed climb, then you're going to see mortgage rates as well as student loan rates rise. The question is this going to have a practical effect on the rates that the U.S. government can borrow at? And it's partly going to depend on the appetite for foreign investors to continue purchasing the U.S. debt. But you have to understand that everybody in the world already knows about our fiscal situation. As a matter of fact, a few days ago, Dagon Global, China's only credit rating agency, downgraded us for the second time. So this is not new information.
But it's new to us in the fact that it's never happened before in this country, right, where a U.S. rating company would do this to us. The other two haven't done it yet, but Standards & Poor's was rumored to do it, and they did it.
So we've had this AAA rating now for 70 years, and this downgrade could serve as a psychological haymaker, which supports the weakness that investors already have in the political system here in the United States. If indeed that force forces driving people into the treasury markets, then we're going to see a rise in rates.
Okay, real quick, what do you see for the stock market on Monday now that the news sinks in over the weekend?
Well, this does introduce additional instability. Everybody now is going to wonder what the other credit rating agencies are going to do.
Are we going to have a bloodbath like we had yesterday?
That's a tough question. I believe that we had the bloodbath yesterday in preparation of what's happened today. Again, what's happening today is you have two counterbalancing forces driving the market for interest rates. One is the U.S. economy is weakening and weakening quickly. When that happens, treasuries have historically been looked at as safe haven investments. People run into the treasury markets. On the other hand, you have this, and you have a potential weakening of demand from foreign purchasers. We're going to see a battle take place in the treasury markets on Monday, and that is going to drive, I believe, action in the stock market. What happens is somewhat random and unpredictable.
Okay, we'll leave it at that then and just wait till Monday. Thanks a lot again. Appreciate you being